highlights of the last 6 months would be continuous momentum. The business is continuing to grow and move forward, and that has been a key feature of the past 6 months' trade, particularly the past 2 to 3 months, where we have seen our order intake improve up to 20% year on year. So quite significant momentum, particularly in the second half of the past 6 months. Another key feature for us over the past 6 months is improved visibility of the business and of the brand Creightons. Creightons Hair Care is now in the top 20 in terms of volume trade, and we are one of 4 brands in the top 15 that are increasing market share, while all the key major brands in the UK appear to be struggling and are seeing a slight decline in the number of consumers they are selling to.
The highlight of the last 6 months has been a continued growth in revenues and in our operating profit. Revenues have grown 7% in the period, up to £16.7 million. This has driven our operating margin up to 5.8% from 5.1% the previous year. Again, a significant growth in company performance. Our earnings per share is a significant growth of 9% during the 6 months. And part of that is the comparatives for the previous year had a lower tax charge than we have in the current year as we've normalised the tax rates for a full period. This means that we are delivering a return on capital employed of 10.7% in the 6-month period. And for the first time for our shareholders, we are paying a dividend of 0.15 pence per share. And the final point is that we have had a significant increase in working capital in the period. That has increased our stock holding and our debtors, but all of the ratios are in line with our expectations. That growth has come as a function of increased sales in the last 2 months of the year and an increased forecast that we're building stock to meet for the next 3 months of the year. The growth has arrived very quickly to the business, more quickly than we anticipated, with 20% growth in the last 3 months of the quarter. This has meant that we have had growing pains in meeting the demand. We've accommodated that in line with our usual agility and flexibility by outsourcing some of our branded products where we can control the manufacture, which has meant we have been able to keep up with demand and meet the expectations of our customers and keep everyone going and still deliver an increase in profit to our shareholders. We are aiming to build our business to cope with a doubling in capacity by 2020. This increased growth will be managed through 2 strands. One is looking at operational aspects to the business, which we'll be looking at the organisation that sorts there and increasing our operational management. We'll be expanding our shift so that we can do more within our current footprint, mainly our second shift. And we'll also be increasing our investment in engineering resource to support that, to ensure that we are operating that equipment effectively. And the second strand is we aim to spend around £800,000 over the next year, increasing our capacity and capability within the existing footprint. And that will be by buying a bottle filling line, a high-speed tube filling line, and automating our jar filling operation, which are the major parts of the activity that drives the sales growth of the business.
Plans for the future for Creightons fall into a number of key areas. Number one, we are looking for acquisition. Brand acquisition would be ideal for us. We've established ourselves very well in the value sector and mass sectors in terms of our product offering, and we are aiming to move into the premium sector. So whilst we are doing that with some of the Creightons professional branding that we're bringing to market, if we could find an acquisition ideally in the premium skincare space or premium hair care space, that would complement what we're trying to achieve with our brands and how we're trying to drive the business forward. Another key thing for the future would be a move into the digital space. We have just recruited a digital marketing manager that starts with us in the new year, and this will give us an opportunity to start exploring in more depth how we can take our brands into the digital space, both with partners like Amazon and eBay and some of the other key players in that space, but also in terms of how far we could potentially develop our own e-tailing opportunities. Another key point for us for the future is to extend our distribution channels for our branded products. So for example, QVC, which is the TV channel of distribution, we are going to be trialling both Feather and Down and Emma Bridgewater, which is a brand that we license over the next few weeks. And that's a really exciting development for us in terms of reaching different types of consumers through a completely different distribution channel. Export is developing well for us. It's good, steady growth. We're opening up new customers and new markets. We're actually moving into a slightly different phase that now we've been trading in some countries for a number of years. We're evolving our models through distributors to direct to retail. And in some cases, we're actually opening up our own operation direct in market with a country manager or an export manager within that market that can manage direct to retail for us. We find that as we're evolving and as we want to get closer to the consumer and closer to the retailer, that actually going direct and moving those distribution models into a direct supply is actually beneficial. So this is quite a long process and it will evolve market by market. Australia is the first one that we're moving into that kind of model, and just getting closer to the retailer. The other thing that we're doing in export is also ensuring that where we do go direct to retail, that our customer understands the full breadth of what we can offer. So instead of just offering our branded standard product portfolio, we want to ensure that they know that we can do exclusive brand, that we can do private label, and that we can start meeting the needs of their consumer in terms of speed to market and in terms of product innovation to the extent that we do in the UK.